Welcome to Millionaire Mindset, where we give you ways and advice to achieve financial freedom. Most people experience their worst years in 2020 and 2021. First, a pandemic caused many folks to dig deep into their pockets to pay medical expenses. Alongside the pandemic is the global lockdown, which paralyzed businesses and stock markets for months. But some people got more fortunate as they have made a profit from these 2 years. It's like they had created a lifeboat for themselves way before the ship sank. So in today's video, we will share with you the money moves that some people made before the pandemic. These things are the lifeboats that saved them through 2021. If you did at least one of these things, consider yourself lucky. If you don't, there's still time. Remember this proverb: the best time to plant a tree is 20 years ago. The second best time is now. Without further ado, let's jump right into it. Number 1. Define your savings goal. In order to achieve every item on this list, you must have a clear and definite goal. Don't save money for the sake of saving money. You must have an end goal. For example, you plan to have your own house in 5 years. So you must compute the percentage of your income to achieve that goal. In other words, you should have a very detailed layout of what amount you'd like to go into each plan. It is nice to visualize these goals as little piggy banks with labels. But we're not saying to buy a bunch of piggy banks because it is the wrong way of saving money. The logic behind this is that you'll be able to treat like a daily budget, where you divide every coin for each of your goals. This method will help you keep track of your financial goals while allowing you to remain disciplined with your savings. Another thing is that you can prioritize your goals from the most important to least. That way, you will know which piggy bank will continue to receive its percentage when your income is not enough. Nonetheless, it is personally up to you regarding what saving piggy banks you should have. Budgeting is like a skill or a talent. It is intimidating at first, but you can master it once you get the hang of it. Number 2. Grow your emergency fund. If you have a healthy emergency fund that is up and running right now, then good for you. But you don't stop there, as you need to focus on growing your emergency fund. A great rule is to save enough money to sustain yourself for up to 3 months. But this amount is actually on the lower side. Experts suggest that the best emergency fund can support a person or a family for up to 6 to 9 months. And some even suggest having a 12-month fund, especially for those who had irregular incomes. So that if you lose your job in the pandemic, you will stay afloat while looking for another work. Starting the fund is easy because the harder part is growing it to its full potential. It may become intimidating, especially at the beginning, but consistently saving for a couple of dollars will go a long way. But you need to be realistic. You must know your total monthly expenditures. You don't want to create many debts just to have a healthy emergency fund. That's not how it works. By securing your future, you're sure to withstand any financial constraints. Number 3. Started a side hustle. One way of growing your savings account and your emergency fund is by having a side hustle. It can be complicated and intimidating at first, but you should know that side hustles are common nowadays. Older generations say that millennials and Gen Zs are lazy, but most of them have 2 jobs and work 60 hours a week. Also, the most important thing is that side hustles must remain on the side, meaning you can do it on the weekends or after work hours. That way you don't mix up and stress yourself. A great side hustle would be that thing that you love doing the most, or you're an expert at it. In other words, your side gig should arise from your hobby so that you will not feel stressed and discouraged about doing it. Also, if you love what you're doing, you will not care about its income, or lack thereof, in the beginning. If you're good at something, we believe that money will come to it naturally. Number 4. Made a plan to pay off debt. Having a debt during a pandemic is a pretty bad situation. It's like being stuck between 2 rugs. You need to keep afloat during these challenging times and at the same time, pay off debt. That's why people who decided to pay their debts before 2020 are winners. But again, don't lose hope. Take some time to write down your debts. Ask the lenders how much money you owe them and how much interest they will be charging you. It would be better to arrange these debts from the one costing you the most to the least. So meaning, starting from the highest interest and amounts, then make a conscious decision whether it's easier to pay the least amounts of the highest ones first. Consider their effects on your income. It's entirely up to you. But the most important thing is to make sure that you pay your debt consistently to avoid having fines added onto your debts. Number 5. Build a good credit score. This is somewhat related to number 4, but for the opposite reason. Most people think that credit is related to having debts. In a way, it is true, but credit is not as bad as you think. Having a good credit score is better for you for talking long term, especially if you're planning on buying a house. A good credit score means you're trustworthy in paying off your debts so that they will offer you better choices and plans. And it's not just for houses, but other loans as well. So if you just need a cash boost, getting a loan from the bank is easier if you have a good standing. However, the first thing you need to do is acquire a credit card. Once you get your credit card, just be responsible for your expenditures and pay them off diligently. Number 6. Denounce the status symbol. If you live satisfied, you would die satisfied. And that's what you want. Forget about the status symbol because it doesn't exist. People just create it to feel better about themselves. Forget expensive cars, big houses, and flashy clothes because you will never be happy, paying for all of those for the rest of your life. Imagine buying a very costly home, but you never get to enjoy it because you're busy working just to pay for it. It's worse today as we are fascinated with things that can only bring momentary satisfaction but are just depreciating assets in the long term. Let me remind you that cars depreciate over time, and that's after you've spent a good amount of your money on their insurance and maintenance. Focus on your own bigger picture, like living a comfortable life in 5 or fewer years. Be happy if your house doesn't have a leak on the roof and you feel safe. Be happy if your car can go from point A to point B. Be happy if your clothes make you feel warm and protected. Be happy if your phone serves you effectively. It doesn't matter what brand they are or how old they are, as long as they serve their purpose. Number 7. Educated themselves. Wealthy people don't just crave more money, but knowledge as well. They know that education doesn't stop at high school or college, but is forever. Just look at billionaires like Bill Gates. They're always on the news trying to do something new. They know that every unique experience is a life lesson. That's why we should acquire this mindset. Your end goal shouldn't be a college diploma. Continue to study by reading books that spark your interest because you never know how this will benefit you. One thing that managers look for in promoting an employee is their love for learning new things. It makes sense because when you promote someone, you expect them to learn about this new position extensively. So better build this habit of consistently learning new things because you'll be opening new doors for many career opportunities that will assure you a bright future. That's our list for today. We hope you learned something from it. Share your experiences in the comments below. Join us again next time here in Millionaire Mindset for another round of tips in achieving your financial freedom. Don't forget to like, comment, and subscribe.